Today on ProEdgeWire, I'm with John Embry. He's the Chief Investment Strategist for Sprott Asset Management. Okay, so let's talk about the market for those of us that are making a living in it. Let's talk about specific aspects of the resource equities market. Is there a more safe area to potentially invest? You were talking to me previously, a lot of people are investing, those that are concerned about the markets are investing in bonds, they're buying gold, bullion. Can you talk to me about maybe specific areas where you might be safer?
Well, I think very simply that you'd be infinitely safer in hard assets, and the king of all hard assets is gold, because it's the monetary hard asset. So, I mean, I would suggest that everybody, and I mean everybody, should have exposure to gold in their portfolio. And it could be through bullion, which I still think is very attractive. But I actually think some of the stocks are more attractive because they're historically undervalued to the bullion. And if we get a large move in bullion, which I believe we will, irrespective of who is eventually elected president, I think that there's a big move in the bullion price coming in the next 12 months, and that will unleash the stock. So I think it's absolutely imperative that people have exposure to this. And it's funny because the vast majority of people still haven't cottoned on to the fact that this is a great asset. I mean, gold is going to just post its 12th consecutive year-end higher close, which is unheard of in what is allegedly a free market. And yet nobody's there. I mean, basically the Chinese and the Indians and the people in the Middle East are hoovering up all the physical gold, and people in the West basically are just sort of basically looking around, not doing anything in that field. And I think they're making a serious mistake.
If I'm in the resource market, would I be looking for more of the advanced stage exploration plays or just the producers? Is there a magic formula to help us take advantage of this opportunity?
Well, I actually think you're better off if you're really trying to make the most money in the more junior sector of the market, for the simple reason that people have been so terrified of the market or aspects of the market. They just hate illiquidity. So, I mean, a lot of the smaller companies have reached valuation levels that are historically low. So I think people should be, if they're going to be investing, they should be investing in things that are representative of hard assets. And I think the greatest upside are in the smaller entities in that field. But you've got to be selective because they don't all work.
Is there a particular geographic area that's a favorite to you this week or this month? Because, you know, we've got everywhere from South America to West Africa. Is there an area that you like?
Geopolitical risk is a huge factor. And I mean, we've seen that through the years. I still think there are elements in South America that are very attractive. I think Brazil is an interesting place to invest, for example. I'm more wary of places like Argentina because I think they've got very bad government. Whereas Brazil, I wouldn't level that accusation. I know that, for example, a place that has a terrible reputation that's really cleaned up their act when they've got a lot of gold activity going on is Colombia. I have a close friend that's working down there, and I mean, he assures me that things are infinitely better than they were in the bad old days. But in just in one sentence, I would be really careful of geopolitical risk. And West Africa is not a bad place at this point to do business. But by and large, I feel much more comfortable investing in sort of Canada, to a lesser extent the United States, Australia, and elements of South America and Mexico. I think that they're relatively safe in a geopolitical context.
Don, we follow the Japan a lot because of our interest in the rare earth sector. Can you talk to me about the Japanese economy, especially with everything that's happening with the rising tensions with China right now?
Japan worries me as much as any of the problem areas in the world. I mean, for the longest time, Japan, in the wake of their bubble economy, which collapsed after the 1989-90 period, has sort of just planed along in a form of deflation with their budget deficits getting bigger and bigger and their embedded debt levels at levels that have never been seen before in the industrialized world. And it's worked for the simple reason that all the Japanese public, who are pretty loyal citizens, they gave up on the stock market because it fell from a peak of 40,000 23 years ago, and now it's 9,000. So they don't invest in the stock market much. But they've been relentlessly buying all these bonds that the Japanese government has been issuing for the last 23 years to get to this massive debt level they've got. And it continues. I mean, the debt, it continues to proliferate, but there's one problem. The Japanese public is growing old, like very old. It's got the most mature public in the world. But the fact is, these people are going to have to start cashing their bonds in. They can't continue to buy them. And when that comes, when that happens, they're going to have to start printing money aggressively. So I think Japan's got to, it's a good cohesive country, but they've got massive financial problems. I don't know what they're going to do about it.
We had a gentleman here about a week ago that said that he believes renewable energy will be the next industrial revolution. So he was very, very positive on things like vanadium, lithium, rare earths, graphite. What do you think on any of those critical minerals?
Well, I think they're sort of the thing of the future without question. I mean, there is so much that has to be done and will be done, I believe, sort of to replace a lot of our current technologies and what have you. I mean, that's a down the road feature in the sense that the problem today is the financial issues. I mean, I see that they're talking about the U.S. will be self-sufficient in energy within 8 years because of their shale developments and that. And they may well be, but that's a down the road positive. First, they got to get through the current mess, and that's going to be a problem.
So, John, give me a little bit of your perspective on Europe and their existing condition.
Well, Europe's a fascinating case because the euro was brought into effect by the elites who basically imposed this on their publics. I mean, the public never voted on it. They were never that much in favor of it. They were just kind of overridden. And now the elites, the Eurocrats, have an absolute vested interest in making sure this thing doesn't fail. And unfortunately, you got so many different entities in there with different sort of approaches to things that I don't see how they get this thing to work unless the Germans completely capitulate and they're prepared, along with some of their northern neighbors, to fund all this mess in the southern periphery. And so count me amongst the real skeptics that in the end they can get this together. One of the great things about the whole euro issue, though, is it took the focus off the United States. And so ever since that debt downgrade the U.S. underwent in August of 2011, basically the U.S. has gone merrily on their way doing exactly what they've been doing all along, and nobody's been paying any attention because they're all focused on the problems which appear to be insoluble in Europe. And they may well be right. The problems are insoluble in Europe, but there are equally as large problems developing in the U.S.
There's no question that the euro is going to impact all of us in the upcoming year. John, thank you so much for joining me today.
Oh, you're very welcome. It's my pleasure, Tracy.